ARK Investment CEO, Cathie Wood, is a well-known supporter of disruptive technology and has expressed her opinion that legacy automakers are facing difficulties in public. In summary, she believes that Tesla's stock might rise to unimaginable heights and that Ford, GM, and other legacy manufacturers are facing an existential danger. The investment manager stated that Tony Stark Elon concurred that you should hit the like and subscribe buttons if you enjoy this type of content. According to Cathie Wood's letter to Barron's management, GM and Ford will face significant challenges over the next 5 to 10 years. Renowned money manager Cathie Wood, who is highly recognized in the market and bullish on Tesla, has issued an unexpected forecast for GM and Ford. In the next 5 to 10 years, she thinks it will be very difficult for these companies to exist in their current shape. For Cathie, the bottom line is that these businesses will either completely fail or combine with another. Wood projects that Tesla's stock will hit $1,000 by 2025 and that the company could take a sizable chunk of the overall auto market in the next 5 years if its autonomous vehicle efforts are successful. Conversely, Morningstar analyst David Winston has a bullish outlook for General Motors, GM, and believes that the stock is worth 68. Vehicles from General Motors are the greatest in terms of quality and design in many years. He stated in a letter from last month that GM is beginning to realize the scale to match its size thanks to a competitive lineup across all sectors and a significantly lower cost base. On behalf of its autonomous technology and robotics ARQ fund, ARK and Medicine Management, helmed by well-known stock picker Cathie Wood, has taken an unusual step by acquiring 158,000 shares from GM. ARK has always been critical of legacy automakers. Thus, there is a big change in her position on the matter. The piece, which featured the company's most recent trades from an exclusive interview with Yahoo Finance last month, contained the specifics of the deal. The CEO and creator of ARK Investment disclosed that her team recently met with Mary Barra, the CEO of General Motors, to talk about the company's electric vehicle plans. In a chat with Yahoo Finance's Julie Hyman, she also revealed that ARK was thinking about investing in GM and was keeping an open mind about it. Cathie would stress the value of being open-minded and appreciative of accomplishments. She clarified that ARK Investment is still doing research on General Motors and is considering making an investment in the business. In January, when Ford and GM stocks spiked following the unveiling of their electric vehicle plans, Wood stated her enthusiasm with how Mary Barra is turning GM around and focused on cruise automation. In an earlier interview with Barron's, Wood criticizes their rallies and asserts that the percentage of sales that would come from electric cars would be insufficient, because she didn't think GM and Ford had what it took to compete in the electric vehicle market. Cathie Wood even went so far as to warn that they may go bankrupt. In a recent interview with Yahoo Finance Live, a Tesla bull believes that the electric vehicle maker's recent price reductions won't hurt its brand. Rather, they might make it harder for other manufacturers to catch up. The creator of ARK Investment predicted that because to its cost leadership and advancements in battery technology, Tesla would be challenging for conventional manufacturers to match in price reductions. According to Cathie Wood, Tesla remains the largest holding in the Wood's ARK Innovation ITFRK. Although Tesla's recent price reductions won't hurt the company's reputation, they might make it harder for rival automakers to catch up. Wood claimed in a live interview with Yahoo Finance that Tesla's undisputed leadership in battery technology is the reason for the price reductions. She also thinks that in order for automakers to stay profitable while keeping up with Tesla's price reductions, they must adopt this battery technology. Because of economies of scale, Tesla will continue to lower prices while increasing its gross margins. Abilities can benefit Tesla in a number of ways. First, Tesla may lower its cost per unit by spreading its fixed costs, including marketing, R&D, and overhead, over a greater number of vehicles as it produces more electric vehicles. Therefore, as production volume rises, the business becomes more profitable and efficient. Moreover, higher production volumes may allow Tesla to strike better prices with suppliers of raw materials, parts, and components, resulting in lower unit costs. As a firm makes more electric vehicles, it can lower its pricing to draw in more customers, which can help it win market share. This is one way. That third, economies of scale can benefit testing. Furthermore, as Tesla's manufacturing volume rises, it will be able to invest more in R&D to enhance its offerings and create new technologies, thereby fortifying its competitive edge. In contrast, consider Ford or GM. Scaling to the same level as the general economy is a skill for these manufacturers because they will be unable to capitalize on the economy due to the limited number of electric vehicles they can produce. Cathie Wood can assist Tesla in cutting expenses, improving productivity, and gaining a competitive edge, all of which can eventually result in larger earnings and steady expansion. Tesla recently slashed the price of the Model 3 Performance variant by $9,000 and the Model 3 base version by $3,000. Price reductions of $13,000 were made to the Model I Long Range, $52,990, and the Performance model, $56,990. Ford responded by lowering prices to more effectively compete with Tesla, while GM CFO Paul Jacobson has no intention of lowering EVs prices. The cost of Tesla, as Elon Musk indicated in the company's most recent earnings conference, cuts have resulted in more demand and increases in market share. But not all Wall Street experts are as upbeat about Tesla as the firm. According to Bank of America analyst John Murphy, some think that the price reductions may hurt the company's reputation in the long run and hinder profit emergence. Elon Musk stated during the fourth quarter earnings call that supply cannot keep up with demand, thus lowering prices would be foolish as it would only eat away at profitability and prevent you from gaining any more incremental volume in the near future. Cathie Wood during the Morningstar Investment Conference on Wednesday, Tessa Bull, the CEO of ARK Investment, revealed the price at which her investment firm will sell its shares of the electric manufacturer. According to Woods, ARK will begin selling its shares if the price of Tesla stock reaches $1,000 within the upcoming year. This cost target is the company's base case for the price of Tesla shares in 2025 and was established by ARK in March based on a Monte Carlo simulation. The cost ARK believed that as Tesla added more gigafactories, its product line would grow and its production capacity would improve, which bolstered Target's position. According to the governor of Nuevo León, Mexico, Tesla has announced the opening of a new gigafactory. After obtaining the necessary permits to build a plant close to the border between the United States and Mexico, the electric car maker, Tesla, may start producing its first automobiles in Mexico the following year. In an interview, Governor Samuel Garcia said that Tesla is awaiting the necessary permits and will be able to start construction in March. If all goes according to plan, the company could start producing cars in Mexico the following year. The governor also mentioned that the necessary permits for building the new factory in Tesla were almost ready to be obtained. He continued by predicting that the first cars will be assessed by 2024. Last week, Elon Musk made the announcement about his investment in Mexico, saying that the next gigafactory will be situated there with the intention of producing a next-generation car. With a $5 billion investment, the factory is anticipated to be the largest electric vehicle production facility in the world. As of yet, Tesla has not provided an explanation on the production schedule, so allow me to briefly review. Wood thinks that legacy automakers' reluctance to adopt modern technologies is a major factor in their current problems. For instance, they have remained focused on gas-powered vehicles and have been reluctant to invest in EVs. They are so lagging behind businesses like Tesla, who have made significant investments in EV technology and are able to manufacture excellent, reasonably priced electric vehicles. The fact that new competitors are entering the market and posing a greater threat to established automakers is another reason I think the industry is in jeopardy. Focused on producing electric vehicles, Tesla, Rivian, and Lucid Motors have all been able to draw substantial funding. On the other hand, traditional automakers are losing market share and are having trouble luring new investors. Wood thinks that legacy automakers are dealing with serious regulatory issues as a result. Stricter emissions laws are beginning to be implemented by governments worldwide, which will make it increasingly challenging for automakers to continue producing gas-powered vehicles concurrently. Additionally, regulators are pressing for increased funding for EVs, which will put additional pressure on legacy control the market for more than a century. Cathie thinks they are in grave danger if they can't quickly adjust to emerging technologies and shifting legal CU in the future one.